Hi, this is James Shugg with Westpac London's end of day report for Monday, November the 21st. Well, very much a risk-off day today. Not so much centred on Europe, although Europe was certainly part of the problem. The biggest concern actually stems from the United States, where the Congressional Supercommittee, charged with the task of finding $1.2 trillion worth of spending cuts, have basically indicated that they simply can't reach agreement. The Democrats and Republicans have been bashing their heads together for a long time now, but apparently we're about to hear later on this evening that no agreement has been reached. Now that either means that there'll be automatic spending cuts across a whole range of programs that no one really wants, defence, health and so on. That was the stick that was intended to make sure that this committee actually came up with chosen spending cuts. The alternative to that is that Congress will somehow or other manage to work its way around or procrastinate or delay the implementation of those legislated spending cuts that no one wants. But the problem associated with that, of course, is that it then means that budget deficit reduction plans have been thrown into a real mess. The issue that for markets now is will one of the other ratings agencies follow Standard & Poor's lead from a few months ago and downgrade the US from its current AAA rating? Remember, S&P took the AAA rating off the US simply because the politics couldn't deliver the results. And that's been it looks like that's going to be amply demonstrated again this week. That was one issue. The other issue was that a senior Chinese official said that he expects the global economy to be in an extended recession over the next few years. I've got to say, I have sympathy for that view. It's not my base case scenario, but if Europe gets things wrong, and it increasingly looks like they will, and given the mess that the US politicians are making of management of their economy there, and the headwinds still confronting the US economy, and problems that the Chinese economy has got, particularly related to, well, its long-term problems, but the latest one being the energy supply issue, you can certainly paint a pretty gloomy scenario for the global economy. The third issue today was that Moody said that in their weekly note that the French AAA credit rating was also at risk, or there was an increased risk attached to that rating because of the higher funding costs that have emerged in European bond markets since markets suddenly took the view that maybe there was a possibility that Euro membership is not irrevocable, following comments that Sarkozy and Merkel made to try and encourage Greece not to have that referendum. That backfired on them in that the French-German spread at the 10-year part of the curve a couple of months ago, 40 basis points. Last week, 200 basis points. It's around 160 basis points at the moment. So that's means that the French government, if it were to refinance some debt for a 10-year term, would have to pay today 1.6% more over the 10 years on that new debt, and that's just going to add to the problems that the French government has in terms of its debt levels, in terms of its budget deficit, and so on. And it makes the need for austerity measures and economic reform even more compelling. And we just don't know if the French government has got the ability to do that, and I think Moody's share those concerns. So those three stories, the budget issues in the US, the Chinese concerns about the global economic growth story, and the Moody's concerns about France have really hammered markets today. Oh, there was some economic data too. I mean, home sales in America rose 1.4% in October. House prices down in the UK, but no, look, totally swamped by those three big stories. On commodity markets today, then, we've got gold down 1.3% at $1,703 an ounce. Crude oil down 2.1% at $95.64 a barrel. Copper prices down 3%. I've got here 331 cents a pound. Now, in equity markets, the losses are pretty steep too. It's just coming up to 4 o'clock in London, so another hour of European trading to go. But as we stand, we've got the FTSE in London down 2.1%, the French market's down 2.7%, and the German market's down 2.7% as well at the moment. The Italian market down 3.7% today. And the Dow, it's down 2.2%, a couple of hours into trading. That's at 11,536. The Aussie dollar is at 98.3 US cents. So it's been drifting lower on this intensified risk aversion, this concern about global growth. I mean, think about it. I mean, what's happening in Europe? We're seeing an incredibly slow and drawn out and inadequate policy response to the European sovereign debt crisis, with the ECB still not allowed to participate to the extent that we think it should fully, to enable yields to pull back down to more manageable levels so that governments can get about the austerity and reform process that's necessary if the euro is to survive in its current form. And in the US, elected Congress intended to, their job is to make these decisions. They can't reach agreement. I mean, you've got to worry about the future of the Western civilization, don't you? Anyway, that's enough of that pessimistic sort of musing, and I'll leave it there. Okay, back tomorrow.